So on this, let me ask my friend Uche to talk about, we're talking about upscaling of successful experiences in countries that are looking at SMEs and financing them with tailor-made solutions that are suitable for them. If they start producing, then a lot of the things that you mentioned, Malay, would be in the market. I mean, you have the stock market again. For what? I mean, what are the projects? So the core is in the green growth part. So Uche, please, I would ask you to tell me a bit about the Nigerian experience, your Nigerian experience in that hopefully is going to can be upscaled within the country and in other countries where there are tailor-made solutions to finance the project. So we're going from the macro down to the micro in a very nice way. Please, Uche.
Sure. Well, thank you very much. I mean, it's been really good quality presentation so far.
Yeah.
Can you hear me?
Yeah, and I'm saying extremely interesting.
Yeah, really interesting. And I'd love to see Malay's presentation shared, please, if you don't mind. But I would speak to maybe 3 or 4 things because I really there's no point repeating what everybody has said here. But I think there are 4 points I want to make. The first is, and actually something I think summarizes the last presentation in some ways, you cannot fight this unless you create some sense of prosperity, because part of what's driving the climate issues that we have in Nigeria are things that are related to people's need to survive. So we'll talk about firewood. Some scientific research we did a while ago, I mean, I think we were able to get some data that led us to think something like more than half to 2/3 of the deforestation happening in Nigeria is actually related to people using it to create charcoal for sale or using the wood to cook. So there's a huge mass of people who are poor who need this for survival. But unfortunately, what's happening is that they end up eating their environment, creating challenges for water conservation, creating challenges for deforestation, and starting to accelerate things like desertification, which is really a problem. And I think for us, quite frankly, this is actually an existential issue because at the core, one of the factors that's led to the insurgency in some parts of our country is in some ways related to climate change effects, because the lack of water, the lack of vegetation, fighting for resources between fishermen and cattle headers is leading to all kinds of conflicts. So this is something that for us is existential and we need to address that. But speaking now to, okay, what can we do? What can be done? And I think to what Andrew also said earlier, it's nice to see the roles being played and the formation of government capital formation processes like sovereign wealth funds. And those sovereign wealth funds need to play a number of roles, quite frankly, some direct, some indirect. Indirect to create some level of prosperity, some direct to help fight climate change issues. And to this point, I will say the following. At the NSIA, our experience is very simple. We looked at this and we thought, okay, what can we do? We talk about how to create carbon emission reduction units, how to trade it. Government talk about it, but it's all very high level. Nobody's actually doing anything about it. We thought also for this to happen in any meaningful way, for us to make a change that moves the dial, you need to bring big capital in. You need to bring, the big banks. You need to bring external financing in that is profit-oriented. Sustainable change in this area can only be driven if there's an argument for some kind of profitability of business to be made out of it. This is not something that can be solved through aid or something that can be solved through occasional handout from the OECD countries. That's just not going to happen. So we did something here. The first thing we did was we created at the NSIA, a fund I run. We created a joint fund with an oil trader, Vitol. What's Vitol's need? Vitol needs to trade offset carbon for their business. It's good for them. Our need is to try and create sustainable solutions. And we created a joint fund recently. And that fund is aimed at tackling the following 3 areas. It's tackling clean cooking, it's tackling reforestation, and it's tackling gas flare reduction. Gas flare reduction is a big area in Nigeria. Deforestation is a big area in Nigeria. Clean cooking is a big area in Nigeria. And the 3 are linked. And here's how they're linked. First of all, we have a scheme now to try and provide to the number of people in rural areas who use firewood to cook a more efficient cooktop. and we're hoping to actually be able to give out those cooktops for free. It starts off still burning firewood, but more efficiently. So the firewood efficiency goes from, goes up by 4x. So they use less wood. But you give this away for free, you can measure the CERs and trade that as a way to offset the cost of making sure that those cooktops are handed out to these communities. We've started the pilot, and we're hoping that we can scale that up quite in a minute. That starts to address the issue of deforestation. But gas flare reduction for us is the next step, which is, listen, you can take a few gas flare points, turn that food processing units there, turn the gas into LPG, and again, try and subsidize that into the lower end of the market. Now, this is going to need some significant capital support. But you do two things. One, you mitigate the deforestation effect. The second thing that you do is actually now taking off the gas flares and turning into something really meaningful. And then the next stage, of course, is the big project which is actually reforesting these areas that are completely deforested and planting trees and all that. So this is something we've done. It's a small scale fund now. We've raised it. We've started to implement, and we're hoping that this is something that can be scaled. I think the numbers work very, very well. If I show you, well, this is still at the pilot stage. We'll see what happens when you scale it up. But this is something that can be investable if the price of the CERs are kept at a certain point and remain at those points. And I think there's an argument here for premium to be paid to CERs that are generated from sub-Saharan Africa. And part of it is because most of what's happened, yes, we may have caused some part of our climate change issues, but a lot of it was actually done to us by the industrialized world. So I think how you efficiently use your 100 billion, the infamous 100 billion, could be to make use of that in terms of providing the subsidies. I can put numbers to it later on. It's not quite as polished as the last presentation, but this is just an idea. But we've started to work on this. And frankly, from our perspective is that we want to get the data from doing. We can theorize what the data is, but you really don't know what the data really is until you actually start implementing it. So it's everything from bamboo reforestation, mangrove reforestation. We're going to use that to preserve water. We're going to use that to try and reforest some of the areas that are affected. And we're going to trade the emission reduction units as a way to turn the number. So far, our model tells us that we could make in returns in excess of 2.5 times our money over a 10-year period. Okay, that's not bad. It's not bad. But again, like I said, it's a model, it's theory, let's implement it. But this is the kind of thing, in my opinion, that starts to attract big capital. You need to show that this can work and can be scaled. The second thing I think we're doing, quite frankly, is in terms of the area of creating general prosperity. When we set up our fund, we set up a policy that we will back every venture capital, every private equity fund in our continent, in our country, to create that asset class. Of course, it's been with mixed results. Some haven't been so great, some have been okay, right? But that capital, that asset base, asset class is beginning to grow. And I'm hoping that that asset class starts to create a pocket of prosperity that helps upscale small and particularly medium-sized enterprises. Final thing that we've done, quite frankly, is drive and the creation of what we call a development bank of Nigeria. That development bank actually targets small and medium enterprise area by providing them cheap capital that is guaranteed, essentially. And I think in some ways that actually is helping bring the cost of capital to small businesses down. Again, you need to do that, and you can tie that down into climate-related requirements to say, listen, we will give you this cheap capital if you implement the following elements to your work. So people that operate restaurants, roadside restaurants, could we give you cheap capital if you use our clean cooking as opposed to open firewood or that's exposed? These are practical solutions, in my opinion. And I think, look, we need to start solving this problem ourselves. Create a model that works for other people to start to invest. And quite frankly, back to this infamous 100 billion, my sense is this, the number, I'm not sure, a lot of people have done some work into it, but it's one of those things that it is easier for you to tell some of these developed countries to fund the war than for them to fund this. Now, that is a really side peeve, but my sense is this: if we use that capital to subsidize or create guarantee schemes for some of these projects that I think put some level of returns, that then attracts the big investors into a reforestation project in Africa, into a clean cooking project in Africa, into industrialization project that has an emphasis on climate change, I think that will go a long way. One final project that we're working on recently is actually water filtration. Here's what's happening. Somebody actually invented this. I think it was in either Kenya or South Africa, but we're trying to use it in Nigeria now. A lot of water, people that live in these rural areas end up with poor quality water, which they end up boiling to purify, to drink. And the reality is that you're doing two things. A, you use firewood to boil the water. The firewood is not efficient. Have the water evaporate and use more water than you need to. A filtration system that actually removes 99.9% of the bacteria, but doesn't require cooking or boiling of the water, so that they can take water from wherever, filter it, and be able to drink it. That is very important, because I think we talk about deforestation, but we forget about the effect on water. Water resource management is a big threat for many, many, many people. There is a place in Nigeria which is a hotbed of insurgency and a conflict at the moment. And this place, it's a place called Lake Chad territory. Lake Chad is a lake that covers parts of Nigeria and parts of Chad. Very big. I mean, there were estimates that sometime in 100 years ago, it was the size of Belgium. But in the last 40 years, it has shrunk more than 40%, more than 90%. And that's partly because of some of these issues. So water management is extremely important, and I think we need to address that. So really, this is some of the things I want to speak to. I mean, I don't want to repeat what everybody else has said. I'll pause here and hand back to you, Abla. Thank you.
Okay. Thank you, Uche. And I think this is very interesting. I mean, we're talking here about something very specific related to in Nigeria, but can be upscaled. And the idea of creating guarantee scheme, using the available funds to have guarantee schemes for everything, for all the work with the project, I think is actually quite useful. I'm going to ask all of you that we extend for 10 minutes exactly, so that everybody has a chance to talk and we have useful discussion. I hope this is okay with all of you, all speakers, because I'm going to ask you a very critical question at the end. So you need to remain until the end, no way out, okay? I'm going to leave Mr. Emad, my Egyptian friend and colleague, to the end to talk about the EBRD experience. But I want now to go to Harry, who, when we were talking, said, I don't know that much about Africa, so I'm going to talk about generalities and the Asian experience. But I think by now you know more than enough about what's happening in Africa, and surely you can throw in, all right, and add a lot. The idea about talking about the blended finance, okay, which came out actually in Malay's presentation as one of the solutions. It was actually even raised before. Innovative ideas on how to approach the financing. Yes, we'll get over the obstacle related with the existing finance, but all the new ways of doing it without getting into details of the carbon market, please, because like I said, we're going to have a specific session on that, okay? So please, within the next 10 minutes, please tell us what you have in mind.
Yes, and Abla, with apologies, I do actually have to leave sharply at the hour because I have a meeting with my CEO. So
okay,
I do apologize. I will have to drop off in 12 minutes.
Fine. Okay.
Yeah, I mean, such excellent interventions from other panelists here. So thank you for that. You know, I think overall, altogether, we've already covered all the solutions that there can be. It's just the challenges are, scaling these, making these innovative ideas repeatable deal after deal. And there's really no easy silver bullet to resolve this, any part of the frontier markets in the world. I just want to reiterate just a key points, even if it's a repeat of what some of the other panelists mentioned, because they are important points, and maybe some specific examples of initiatives that go on as well. I think this concept of what is actually going to be financeable. Today, there is quite a bit of focus at the project level rather than at the company or corporate level. Now, there are obvious reasons why once it starts to go into the blended finance territory, and for resilience, it's currently pretty much all public sector funded, or it's blended finance of some sort. But anyway, once you start to go to that kind of territory, typically there is a very clear sort of project or user proceeds that, funders of blended finance facilities want to see. But again, if we keep just thinking about very focused project level only and structures that befit quite unique projects as they can be, even in the same sector, we're going to have scalability issues. So perhaps there can be ways to set the mechanism such that there can be funding deployment at the corporate levels rather than only project levels, whilst there's certain checks and balances in place. The second one I wanted to mention was there was mention of capital markets. Now, not only because I'm coming from an exchange, there's also a reason why I work for an exchange, and that's because the scale is there. On that one slide that was shared about the various different mechanisms, even for self-financing, I think the largest number actually went towards the capital markets. And if we don't leverage on the capital markets, which is what on a global basis, and by the way, far smaller in the frontier and emerging markets, but there's liquidity issues, currency issues, all sorts of issues. But 95 trillion, for bond markets, and something along the lines of 45 trillion for the equity capital markets, right? If we don't utilize the funding that's already at scale there, then we are really going to struggle to leverage the private capital to the extent that we need to in the trillions. I'm going to give some specific examples of these in a moment after just covering the key points. I know that the carbon markets is going to be covered in detail, so I do not want to go into it, but I just have to emphasize the power of carbon markets, especially for resilience and adaptation, is so powerful. And the pricing of carbon credits today that are contributing towards resilience and adaptation, and these are specifically called removal carbon credits, they are going through the roof, right? Nature-based solutions, you're looking at anything for quality carbon credits from something like, $7-8 per ton. These are volatile. For tech-based removals, all the way to $120-150 per ton of CO2 removed. So can you imagine the financing that this can bring? Although it does come with challenges in fragmented market today and voluntary carbon markets, the demand and supply, there really needs to be a lot of work to be done there. And we've actually set up carbon exchange and markets out of here, Singapore, on a global basis with suppliers who are supplying credits from Africa as well there. So let me just give certain specific examples of deals and facilities that are working and have worked. And I know guarantees are being mentioned a lot in this call, but that's because they are so useful, but they're not. There aren't enough facilities for one. And today it does take quite a bit of due diligence again to get one of these transactions over the line. What does that mean? It means that bankers who are supposed to be structuring these deals, they do one and then they shy away from it. It is like 10 times harder from experience to actually close one of these deals for potentially the same fee or less. So if you're purely looking at your P&L, why would you put more and more focus on this? So first of all, we need more guarantee facilities. I think I've already mentioned Green Guarantee Company. Garanco is one that, on a global basis is, quite well known and received, and they guarantee loans and bonds. Just happened to structure and help work on the first ever green bond, Garanco guaranteed green bond in the world quite a number of years ago, so quite familiar with the whole process. The key point of this, as well as another one called CGIF, the Credit Guarantee and Investment Facility. Again, this is not Africa, this is Asia ADB, but they both look at local currency guarantees, both bonds and loans. And that's important because you're creating liquidity and removing the FX risk. This is not new again, but this is actually something so important and fundamental that we do need to address. Just two more points, okay? So when we look at capital markets, we formed a partnership called Mobilist. And this is actually with the UK government because they realized from the Foreign Aid Office and foreign aid related like energy and development financing deployment office that they also can't achieve the catalytic capital and the funding deployment needed if they don't leverage the capital markets for the frontier markets, and acknowledging that indeed these capital markets are not deep. They're not liquid, and it's hard to get companies to actually list there. So they've partnered with certain key, more liquid exchanges in the different parts of the world. We are fortunate to be one of those partners, the only partner in Asia at this point. There's one for Africa as well. And of course, like funding is fungible, so anyone can come and list, but they would actually provide anchor investing. It's a facility, it's not a fund. So they will capital recycle to stabilize the IPO. So anchor investment for IPOs that are contributing towards SDGs defined quite broadly. And once the company stabilizes post-IPO, they will actually recycle that. They also provide technical assistance as well, also for the bond side. So I think we need more of these types of facilities that help to scale things up. And finally, just to talk about insurance-linked securities. Now, here in Singapore, we've been promoting the cat bonds, as they're called, the catastrophe bonds, quite strongly. And we've got a number of catastrophe bonds that have been issued out of here as well, with support from the government, etc., funding support. Essentially, what a catastrophe bond is it allows the issuer to receive funding from the bond only if certain specific conditions like earthquake or tornado have actually occurred. So it directly lends towards providing funding for resilience. And these are typically issued by sort of insurance type of companies. So it's sort of like an insurance securitization, transfer risk, insurance actually transferring the risk to the capital markets investors, right? So these kind of transactions could work quite well for Africa as well, as long as can be found where there's depth of the liquidity of institutional capital. I shall pause there. Thank you.
Very, very interesting and very important. And you will come back for the carbon thing. Well, no discussion about this. You will come back for the carbon one. But the points that you mentioned are actually very important, that the guarantee schemes, as nice as they are, there is an issue there. And that the financing by project and by topic could be alternatives, like by disaster, by. Okay, now I know that you have to go. And I had this question, which I was not planning to reveal, all right, but I will reveal it for your sake and to their benefit, okay? There is no silver bullet, yes, okay? But if there is one, okay, in 30 seconds, what would be the #1 area that you need to focus on?
Oh my God, Dr. Abla, you're putting me on the spot.
I am, because you put yourself on the spot. I needed another 10 minutes. Then everybody would be on the same spot. Now you're on the spot on your own. Okay.
Yeah. You know, I know it's
30 seconds, Harry.
Yeah.
You have a meeting, and we have Mr. Emad.
Yeah. You know, it's the whole of, we collectively need to see the whole of the parts. You know, there's each of us have solution in the different components, like whether you're in the private sector or the public sector, and we're not working sufficiently to help. It's just the scaling of individual solutions. I think we really need to identify what are the solutions that can scale. Identify 1, 2, 3, 4, 5. And then just really look at what are the frictions that's preventing the scaling of these, you know, that really has the potential to work. Why is that? Break it down, you know, then go back to the EMDM discussion and say, can we have solutions that specifically look at this? You know, we've just helped to set up a net zero alliance in Asia Pacific as part of the GFANS, the global, the Glasgow Financial Alliance for Net Zero, of private sector FIs who have committed to net zero. Of course, that's more climate change mitigation. But one of the key things why we decided to help set up the APAC network, and there's an Africa one, and there'll be Latin America one, etc., is precisely because it's not just about net zero coming to Asia. It's about Asia or Africa or Latin America taking what is needed on the ground in a very well thought out manner. Specifics to say this is our contribution, whether that's based upon science, you know, knowledge on the ground, and so this is how we can work together, and that's the kind of contribution I hope we can all be making from the global south.
Mm-hmm. No, I think that's very useful, and that's focused enough. Take what's on the ground, that is successful and scalable and remove obstacles related to it. This is your baby silver unit. Okay. Okay, it was a pleasure to have you, Harry. I know that you have to go. The rest of you, please, I need another just 10 minutes for Mr. Emad to share his experience with EBRD in Egypt. And I left Egypt intentionally to the end because we are hosting this and you are all our guests. So Mr. Emad actually is going to, I'm sure he supports this with me. Right, Mr. Emad?
I thought you were going to say because he has the gold.
Of course you have, but then you have to tell us about, we are after the gold every second. We're after the gold. I
was just joking. No, the thing is we just had a power cut, so I had to step outside and sit in the terrace because it was too hot inside and there's no AC.
Oh, so okay. All right.
I hope that no wind noise in the background or
no, that's perfect. But then when we were talking, okay, you mentioned something about the readiness of the market, the readiness of the country itself. We are all talking about bankable projects. Okay, again, going back to the very nice presentation by Dr. Maleh, we need bankable projects and upscaling, etc., etc. Who's responsible for having those bankable projects? There is a consultant, there is a banking sector, there is a government. Who's to lead here? Who's playing? Who's ready? Who's not ready? Perhaps you can share with us in just a few minutes the experience of the EBRD in Egypt that you have been working on.
Sure. Well, let me be very brief in the interest of time. I think today's presentation or group of discussions and issue tackling was very rich and very informative for me because I work on the ground. I work on the implementation. But when you discuss climate change from a planning, a road mapping, from a strategy perspective, you get to see all these wonderful big numbers, the 100 billion, the 500 billion. But when you land down on the ground and start taking all these efforts, heroic efforts of availing these finance options to channel them into the market, you get a huge, big market reality check. There's a big gap, there's a disconnect between what the global perspective is and what the people on the ground are willing or even know how to do. Therefore, we're saying once money is available, and I'm convinced that enough money is available for the level of understanding on the ground right now. We have a drop of knowledge at the consumer level, at the private sector user of natural resources level. We have less than perfect capacity within the financial institution industry to be able to channel money into green investment. They need to redefine what bankable project is. You cannot continue to use the same rules of pre-climate change awareness to post-climate change awareness. Things have to change at all fronts, not only the strategy makers and the development partners and the big banks, but also the relationship managers at the banking level that talks to the industry, talks to different sectors. Tourism is different than food and beverage and on and on. So with that intro, what we have is a financing platform initiated and led by the EBRD, but leverage the money from the Green Climate Fund, from European Investment Banking, from the French Development Agency, AFD, and the European Union. So it was a very intelligent way of creating a platform with multiple donors. It is introduced in 27 countries. It's called GEF, Green Economy Financing Facility. In Africa, there are only 2 countries that are adopting this, Egypt and Morocco. In Egypt, we have somewhere between $600 and $700 million of available finance from different processes. We have 6 or 7 banks that we work with. We've managed to do about 100 million of those 600 and 700 million in actual projects or loans that got secured between these banks and the private sector borrower. Why? Because it took about 4 or 5 years to get the market to be ready. Now I'm going to get back to the point that you asked. How do you make the market ready? Who is the market, first of all? You have a borrower that needs to borrow some money to invest in a project that produces a return for the borrower. Climate change is well and good, but it's not really the driver for the borrower. You have a bank that needs to lend the money and make sure that their money is well invested and produces the return. Where it comes to green issues or validation of whether the green issues have been accomplished or met, it's on the back of the consultants and the development partners. So we still have a framework that is lacking that strong connection between availability of finance, channeling it into the market in a way that could really produce the mitigation and adaptation objectives that we're all aspiring. I can't, but I can get into a lot more details, but I think the issue is really a challenge of, let's make the big talk into small pieces of activities, the collection of which can really come back to these big pictures and have the results. We have ideas about the tourism sector. You need to link the revenue to their debts. So if a hotel owner borrows money, he cannot be exposed to some terrorism activities in one spot and the tourism industry dies for 2 years and cannot pay back their loan. But if you come up with some creative ideas where that money is available for those tourism investors and repaying the money is attached to the revenue, then you really got them on your side. That's just one example. I don't want to get into details with this, but I think the name of my recommendation is you need some programmatic approaches to take whatever available funding into the market in a creative way. Consultants included, development partners, bankers, think tanks like ECES, all of us are into this together. Everybody has a role to play. I don't want to really take more time because I know we're very, very short of time. I have a call right after this one.
Thank you so much, Mr. Emad. Thank you. Very, very interesting and very useful. When coming on the ground, we definitely need to collaborate, bring everybody together. The example you mentioned about the tourism is very useful. Okay, and everybody needs to work. But I think there is a need, and we've already talked about that in upgrading the capabilities of all those players in the market. The banking sector is not really ready in more often than not, even in dealing with small enterprises, let alone dealing with climate issues. This readiness of the project for finance requires a lot, and requires also a lot of capability from governmental institutions themselves. So thank you very much for that, and there will be all the other issues that we talk about. I want to go back to my very important question in 50 seconds for everybody, and I'm going to start with Dr. Kevin. Okay, again, the silver bullet. There is no silver bullet. Okay, and there is gold, or maybe there is no gold. There is gold, but if we the ones who have the gold are the ones that can make decisions. So we want Africa to have the gold. And by the way, seriously, Africa is rich enough to have the gold and deserves to have the gold and the decision making. There is no silver bullet, but if there is one, what would be the first thing that we need to focus on if we are to improve the finance capabilities for the climate and the relation? Dr. Kevin, please.
Thank you very much, Dr. Abla. I've really found this discussion very engaging. Thank you very much for having me on. The closest I would think to a silver bullet would be for countries to have enabling environment that is legal and regulatory to be able to create what I would call an enabling environment for private sector participation in this particular project. Because we know for a fact that the resources from the exchequer are going to dry. There are enough competing need for those money. So in my view, if you do that, you will eventually be able to attract investment. And I always say, and I think I need to say this because I always tell people, one of the things that I learned as an engineer is that current follows the path of least resistance. And I've come to realize that in real life, capital also follows the path of least resistance. So if we make our environment enabling, then we'll be able to mobilize the resources that we require, and we will be making headway or progress towards what Andrew called financing positions. Thank you very much.
Thank you very
So
much.
we must invest in capacity.
Yeah, that's actually extremely important, and that, yes, capital definitely will follow the least resistance. Enabling environment is the key. Okay, Dr. Malay.
I think there's no.
We'll have enough time to think now. Okay.
No, I will say I will say triple things, right? To just kind of touch base a little bit what Kevin was mentioned. There's triple things: how we can have a stronger institution, national institution, strong institution, how we can have better project, design a project and program, and how we have better policy. So the combination of the three things is quite important, and that will be the foundation of all of this.
No, I agree completely. So this is complementing actually what Kevin just said, and it's and they're working together. Maybe we should ask for all the help in improving our capabilities of dealing with those things, because the money is not going to stay. When you mentioned very politely, Dr. Kevin, that there are competing targets, okay, my mind went right away to the Ukraine war, because we're not quite sure if the money is even coming to the climate, as important as the climate is. So we already have one big, huge animal competing with us. Anyways, Mr. Andrew.
Again, let me thank you, Abla, for putting this together and for inviting me to participate. I mean, I think it's been a really great discussion. Unfortunately, I think Kevin stole my thunder in terms of my silver bullet. I've been a private sector investment guy for most of my career. And so certainly I believe that that is very, very important. So I'll offer maybe a bronze bullet instead of a silver bullet, which is to say that I think our governments and everybody should make every effort to increase our domestic savings rate, which I think will really help to leverage the whole financing thing, because you know, your own money from your own country or your own region has to go into a project first in order to attract other people's money and to leverage that, to leverage your own money to the maximum effect. So I think that that's one thing. And I think, sorry, I just do two silver bullets. Maybe it's just like judo where you get 2 bronze medals. The second one is really to look at increasing the guarantee facilities to take some of the perceived risks off the table. And I think that the public sector, you know, what the public sector should be looking to do is not to put its money into these things, but to leverage its resources in such a way that they can crowd in private sector money. And I think that, you know, providing capital and funding for guarantee facilities will assist this immensely. Thank you.
Thank you. Thank you. Excellent. Uche?
Yes, can you hear me?
Yeah, sure.
Well, I don't know if I have any bullets after everyone is exhausted.
The silver bullet.
But I would say the following though. For me, what gets measured gets managed. And I think the most important thing for us now is not just to talk about these things, but start putting up some real metrics, even if it is at a national level or through any of the agencies that fund fund anything related to climate change or to energy transition. And here's what I mean by that. Now, may not necessarily be the most challenges for the way they start putting up metrics of measurement at national levels that are given that same level of prominence, be it in terms of hectareage of areas reforested, be it in water conserved, be it in any kind of scheme. And it shouldn't be things that are so hard to measure, like, you can talk about carbon emission reduction units all you want. Don't forget that these things need to be implemented at the very ground level. So it has to be metrics that people can relate to and be able to measure in their own personal lives and actually translate to something that becomes a much bigger objective. So I think it's number one, because that focuses the communication, focuses everybody's attention into what needs to be measured. Perhaps I'll probably add one more thing, and I think we've talked about guarantees, and Andrew and I worked many years ago to create the first private guarantee structure there is in Nigeria for infrastructure bonds, which of course is doing a lot of work now in clean energy. The reality though is that I think I have learned that you can actually start some of these things fairly small, but in a country like ours, small could be scaled across multiple people and become very impactful. And so take a few practical projects and implement them. Clean cooking, number one. If goals set that says nobody will use biomass to cook in sub-Saharan Africa in the next 40 years, that starts to change things, and you measure periodically how you get there. So it's about measurement, it's about accountability. Thank you. 35 seconds, sorry about that.
Yes, thank you, Uche. Before Mr. Emad, I'm going to take Ambassador Raouf Saad, who's actually, this is the Ministry of the Environment, on his personal behalf and on behalf of Dr. Yasmin. So Dr. Yasmin is still with us in spirit, and Ambassador is actually very powerful partner in this. Ambassador Raouf, please.
Thank you, Dr. Abla. Well,
your silver bullet.
Thank you very much. Well, I know that we have very little time, but I could help, the temptation to speak, because I'm really impressed. It's quite an informative session, and thank you very much for selecting very distinguished speakers. I trust that knowing that now you have the ingredients of having a specific proposal on the financial link. But I want to shed light on a different angle of the situation, that away from the very tiny the details that have been covered by the Minister Yasmin and others distinguished speakers. One, I'll just mention two figures. As we all know, that there is a commitment of $100 billion, and according to the very recent report by the OECD, only $83 billion have been met, and mainly loans, and they went to Asia and middle income countries. This is something that we have to take into consideration. Second is a recent report by the United Nations has raised the estimate for the commitments to $400 billion. I think that has been covered in a way by the lady in this intervention.
Okay. All right. Thank you so much, Ambassador Raouf. Well, anyway, I will not take more of your time. Thank you so much for your incredible contribution and participation in this webinar. Thank you so much. We are going to put together all this in something neat and concrete, and allow me please to send it to the speakers, okay? See if they want to add something and make it stronger, all right? Because we are going to have this and present it on the relevant day of the issue on the conference itself, okay? So thank you so much. Thank you, Kevin. Thank you, Uche, without any, any titles. They're all my friends, brothers, Kevin, Uche, Malay, Andrew, and Harry, who just left, and Mr. Emad, who left as well, or has a problem with the connection. Thank you so much, and looking forward to having you, okay, participating in the next webinars as well. Thank you so much. Thank you. Bye-bye now. Bye.
Thank you very much.
Bye.
Bye-bye.
Thank you very much. Cheers. Bye.
Thank you.